All right, good morning, good afternoon, or good evening, depending on where you're joining us from, and welcome to our special NFP trading session. It's great to see everybody. I am most impressed by the attendance today. Looks like this is our biggest group of exploratory news trading yet. I don't know if that's because we had kind of a slower market week, oops, or if it's just because I think people are starting to wise up to the fact that this isn't, this isn't for naught. So it's pretty cool to see as many of you guys here as that are here. Welcome, especially for those of you who haven't attended one of these before. We're pretty casual and laid back, but we end up finding some pretty good trades sometimes. The bigger the news event, the better the setups have been. And when we get like really no news movement, then we just kind of just chat about the market. Hopefully today we get some movement. Today's been a pretty my first NFP, yeah, party horn. That's right on. This week's been pretty flat, so hopefully we do see some sort of action. For those of you, like I said, this is kind of your first news trading session. I know it might be your first NFP. I think you've done some other news, though, is that generally speaking, our best approach is just to find 15-minute setups that essentially form like the perfect 5-minute setups where we have really good correlation between both the Fibmaster and Momentum Master for a setup that we get a nice refresh, and we're coming from the Dynafibs on Fibmaster, and usually those tend to be the most solid. Obviously, we take our trades, and for any of any new guys here, there's no way you should be trading live. As far as those of you who have been through every single or most of the news trading, I'll let you make that decision. I haven't started trading live yet, but maybe I will today, depending on the setup. I don't know. So we look for the 15-minute setup. The earliest possible setup we can take is 15 minutes after the news drops. We don't like to be frantically trading the volatility, but rather the result of the news. So you usually see after the first 15 minutes, things kind of get a little bit less crazy, and we start to see some of the bigger moves. Of course, that could be 15 minutes after, 30 minutes after, an hour after, so there's different slices of time we can look at. We can look at the hourly even for setups. So at this point, I want to run through what I've got up on my charts, and I've got the DAX, my usual suspects. I've got the DAX, I've got the Dow, I've got oil, and I've got gold. And those are kind of the instruments I like to focus on. Of course, I encourage you to trade or view whatever you want, and then keep us posted on what's looking good. So when we share information, we can actually cover a lot more instruments than simply me with the small number that I like to look at for news trading. So if you're watching the euro, keep us posted on the euro. If you're watching the pound, keep us posted on the pound. I know we usually have a couple of you guys that like to look at the CAD. Keep us posted on that. And we actually usually have one or two people that like to keep an eye on the S&P 500 and the NASDAQ, whereas I like to watch the Dow. So don't hesitate to share what's going on, as I won't be able to cover all the instruments myself, especially once the news gets closer here. It tends to slow down because of my country internet connection. It tends to slow down my charts quite a bit. So we got about 10 minutes before the news. If there are any questions or anything you guys want to share, by all means, go for it, and we'll discuss it before we actually get to the drop of the news. Otherwise, sit back, relax, and let's wait and see what happens. Okay, that's a good question. Can you refresh what you would like to see on the Dow 15 minutes to take the trade? Okay, so in the case of the Dow, we can see here on the 15 minute that we are trading above actually a triple convergence zone. Ironically, this would have worked as a triple convergence trade earlier today. Oops, let me go ahead and get my pointers going here. And essentially what I am going to be looking for on the 15 minute is we're going to need, in the case of the Dow, because we are trading away from the Dynafibs at the moment, what we're going to need is we're going to need a refresh here on the Fibmaster. So we're going to need the Dow to come back and retouch this support and resistance area here, and then we're going to need a bounce away for the signal. So probably speaking, this would be, based on what we see setup-wise here, this would be a 30-minute type trade because this, unless we crash at the end of this 15-minute as the news is released, and then in the 15 minutes after the news, we head back up. So that would be essentially this candle and then the following candle. And that's what we'd be looking for in the Fibmaster. And of course, that would, by design, refresh us on momentum for the same type of setup. Now for the bearish trade, we're going to need a breakout, a pullback, and a secondary move below 16,250 for the sell trade. However, that is the conservative way to trade. For a bearish trade, essentially, I mean, by the strict definition, we just need a breakout below 16,250 with a sell signal. So, I mean, this could happen either, you know, in the first 15 minutes after the news. So, the conservative option is still obviously to wait for that secondary move to the low side. Why not a straight buy of the super convergence zone on the Dow, given it is in the Dynafibs? Simply because I want to be trading in the direction of the market movement, not preempting with a forward order, simply because of the volatility given with the big news items sometimes. It's not necessarily a bad move, but I want a fresh trade around news. That's all. From a normal standpoint, in normal markets, that would actually be a really good trade, and you can see that that worked actually earlier so far today. So your idea for a trade is actually quite sound, and it is only exploratory. Absolutely. I'm saying for me personally, I have been trying to whittle down my approach to a singular method to test it. For me, I'm trying to repeat the same method over and over and over so that I can at least, before I start expanding out what I do around the news, I want to make sure that the one method that actually you helped me identify in the first place, it was actually you personally that helped me identify this method. I want to make sure it's repeatable. And so that really does bring me to a good point for some of you newer guys here. This is an exploratory session, so I want you to throw out all the normal kind of things that you do in trading and just go wild with it. By all means, start exploring some new methods by which we might be able to take trades. Me, I'm a little bit more restricted because I think that the method that I've discussed seems to be working, so I want to take it to kind of a little bit more scientific approach and just use the singular method over and over and over again, so that maybe down the road, 6 months from now when somebody new signs up, I can say, hey, actually we have this method for news trading. It's pretty reliable. We've done it for, a year at that point. And, and again, the reason that I like everybody to kind of explore is because, as I just mentioned, it's actually you guys that provide the fuel for this and have come up with some of the best ideas for our news trading approach. So, and welcome. I'm glad you made it just in time. Well, actually, yeah, you got a few minutes left. So by extension, let me look and see if any of the instruments I'm wanting to monitor are actually in primed position for a news move. The DAX is pretty close to Dynafibs in a refresh, but not quite perfect. I want to see if I can find a perfect one. Okay, so oil. Oil is in, I would consider, perfect position for a trade. So you can see that we've refreshed. Right now we have come to where we're at the Dynafibs already. So you can see that we've pulled back into the trading bands on Momentum Master. We've pulled into the Dynafibs here on the 15-minute. And now if we make a 15-minute move after the news is released, that would provide us with a sell trade. And conversely, if we make a big move higher and get a signal on the bullish side of things, that would also be. So it looks like crude is very close to an actual setup. Gold is also pretty close to a setup. You can see there's a little bit of divergence between the two charts. So our Fibmaster chart seems to be on the bearish side. Our Momentum Master is on the bullish side. So we would need harmony between both those charts to actually get a setup. But again, not real difficult to do considering that we might have a big move. And with the way gold has gone, if it ends up being kind of a continuation move, then all we're really looking for is a setup on the Momentum Master to the sell side, because we're already on the sell side for our Fibmaster. So, and for the sake of argument, let's see if the S&P, and again, even though we're trading from the 15 minutes, we still want to use the hourly reference as, you know, as kind of a guide. We don't want to be trading 15 minutes into some bad areas on the 1 hour. So again, 1937 seems to be a pretty tough area on the S&P 500. Oh, we got about 20 seconds until the news, so actually probably should have done that earlier. And we'll watch it from the Dow. About 10 seconds left. See if we get some crazy action right out of the gate. Taking a step back, NFP in the future may and might be, you know, a very active news item when the market is kind of more sensitive to it. Right now, the market's really looking for a Fed rate decision. So we will absolutely be having our exploratory session for the next FOMC and every FOMC until the darn Federal Reserve changes their Euro US dollar just went north. Oh, and look at the Dow drop at the release of the news. Okay, there we go. There we go. Okay, so for example, if by the end of this 15-minute candle we have a similar kind of setup here on the Dow, that would be a sell signal. Because again, we're getting a nice fresh signal here on both charts, and that's all we need. It's not, let's not try to overcomplicate issues here. Look at that go. 10-year notes up. So okay, I want to get to the actual numbers part of it. Let's see where we're at. Did our average hourly earnings change? Because that's been a kind of a number for them to focus on too. Let's see here. Oh, the number was horrendous. And look, average hourly earnings, 0%, so have not increased whatsoever. And that's a big number to follow. Non-farm employment change added 142,000 jobs. Much worse than expected. The unemployment rate coming in at 5.1%, which is a total manufactured. That's a total manufactured number. Don't believe that in the United States we have a 5.1 unemployment rate. That's garbage. Let's see here. You're right not to buy the super convergence zone on the Dow. Well, again, it was a good idea, and I think out of the in a non-news trading environment, that's a very valid view to look at. The reason I was kind of like, well, maybe not in the news, is because because we can get kind of these big moves around volatility that maybe even as we move up higher on the Dow later, it could send a shockwave into the trade and stop us out before we have a chance to really get a move. Oil is going south, dollar is going south, according to... Okay, so just like we talked about before, this is a valid setup so far. We had a refresh into the Dynafibs coming out of the Dynafibs, and also on Momentum Master, we're getting a move south. Interestingly enough, gold is not really moving that much. Would have expected with these moves in the Dow and in oil that we might see, oh, never mind. It just wasn't showing. So I take that back. I take that back. Gold is making a big pop here. And again, pretty solid move here. It's 100 pips up so far. So now we got about 11 minutes till the end of the 15-minute candle. We don't use our normal restrictions on candle size for news trading. We're really, again, that's why this is exploratory, and that's why you shouldn't be trading these live, because we're just trying to figure out, again, seeing enough different news releases that we could eventually create a full set of rules to go with the setup. So for now, I've been taking demo trades pretty much regardless of the size of the candle, as long as we're getting signals. And for the most part, it's been pretty good. So we'll see if it works out that way today. It looks like for, comparatively speaking to other NFPs that we've had over the last few, this is giving us a bit more activity. So it's good that we had such a strong attendance today, and we've actually got a robust kind of move setup going. That's great. Dow is still, bottom has dropped out. Looks like it by about 200 pips. Obviously, we know the recent line in the sand is that 16,250 level. The next line in the sand is 16,000, as it's a psychological level. And essentially, we'd want that sell signal that closes under 16,250 by the end of the 15-minute candle, and that would give us our sell setup. That is one that I'd be going for. Have we seen when the DAX has moved as well? Looks like we'll be getting a sell signal on the DAX. And the movement we're seeing, we'll go back to the actual expectation here. One of the kind of rules of thumb with news is that when we have a decent divergence from what is expected, we tend to see the biggest moves in news when, we get something quite a bit off from what is anticipated. When news comes in very close to what is expected, we can kind of think that what is anticipated is baked into the market. And so really the only kind of wiggle room left that news can provide us is if there's a big divergence from what's expected, because that's not baked into the market. And you can see this little headline here. I haven't actually read the article, but heads, dollar wins, tails, it rises. It's all good for the greenback. Now, obviously, according to one of our members saying that the dollar was going south, that isn't necessarily true. So, worse than expected would mean that a rate hike would be less probable. I would then expect stocks to rise. I like the way you think. That is true. So this could be the initial shock wave, and then we would see a resulting reversal. So we should actually see the dollar, as was mentioned, the dollar weaken, and then that would boost stocks up. Because one of the, obviously, the Fed's prime directives and something that they look at is jobs and the job market. So that would be expected. The dollar index is dropping heavily, which may explain the rise in gold. And this is a 200 pip move so far in gold. Dollar index is dropping heavily. And so let's talk about how that relates to the news and how the Fed would treat that. So if we have worse than expected employment figures, this may force the Fed to hold off on that rate hike, which of course is dollar negative, right? And that by definition pushes gold up. So then why would we see that the stock markets drop at the same, why would we see the stock markets drop where we would expect based off of the dollar move that they would move up? Well, there is always the aspect of risk trading here, that people are dumping their positions in spite of the dollar. So normally when we get a dollar rise, we see the stocks drop and vice versa. But in this case, what's happening is that we're getting a flight to safety and in a risk-off kind of environment. So even though the dollar is dropping, stocks are dropping along with it, because people are dumping out of that and going, and that's why gold has absolutely shot to the moon. And has been the biggest mover of them all, because people are dumping out of stocks and going into gold, and then gold is also getting that additional tailwind of a lower dollar. So it's kind of like double down on gold to move up, whereas the stocks are dropping. That's also why oil is dropping, even though we would expect, because oil is tied to the dollar, we would think with a dollar sell-off, we would see oil rise. But because of the risk aspect of it, that a worse economy means probably less oil usage, then we see oil kind of moving south instead. Now keep in mind that if we look at oil, it hasn't moved all that much, and that's because that's kind of fighting each other. So the dollar drop should be pushing oil higher, but selling out of oil due to the economic factors is pushing it lower, and that's kind of why we haven't moved very much. If the number is really bad, then the underlying economic problems outweigh the interest rate considerations. Absolutely. I think that's very well stated. Silver jump is even bigger. I've only used the one MetaTrader today. I should have loaded silver on there because it seems like every time we have big news, my other MetaTrader just freezes up. So I didn't even use it, just using this one. So the silver jump is even bigger. Unbelievable. Good day to be long silver, I guess. So we've got about a little bit less than 3 minutes. Let's go ahead and review the ones I have and see if these setups are still valid. Woo! Big drop. About 350. So Dow has sold off over 200 pips so far. DAX is on sell tear 2. About 500. So it looks like I'm going to be taking a looks like I'll be taking a sell on the Dow, sell on the DAX. This is a good question. Isn't the drop in the Dow not too big to enter? Under normal conditions, absolutely. We would never, ever be taking a trade after a 200 pip move on the Dow. But because this is an exploratory demo trading news session, we will be, or I will be taking it. So again, we don't have the numbers for how big is too big. On there. Let's see. Stop size, that's kind of tough because we haven't come up with a really solid number yet. Usually we try to tuck it behind support and resistance. In this case, you know, that's quite a big number. So since it's demo trading, I think we can probably get away with the bigger stop just to see. We can either use, you know, kind of a bigger mechanical stop so that we, or tuck it behind the Dynafib. In the case of the DAX, let's see here. We'll be talking about 100 pip stop on the DAX, about 100 or maybe 105. Oh shoot, okay, hold on, I gotta go place my trades, and then I'll be right back. Okay, so I've shorted the Dow, shorted the DAX. I even took a short position on oil. Oil is a little bit riskier. It wasn't a great signal. And I want to read this comment. FTSE now, though, is above the key level of 6093.8, so no trade. Dow and DAX are better. Agreed. Still, if for some reason we were much higher and we sat above 16,250 on the Dow, we still don't take the trades into the face of the major support and resistance levels. I could have taken gold. I think I didn't have enough, or I didn't have enough time to do gold. But I did short oil. Oh, gold's right at big green. Okay, so I may have had a reason not to. But yeah, what a move. 1109.38 all the way up to 1130. Good grief, that's a big move. Oh boy. Now, one of the methods that I want to talk about with news, and it worked good with FOMC. Oh, good. We're off to the races, and this is why we kind of throw our normal rules about entry size candle out the window. One of the things we can do with these news trades, and it worked really well with gold around FOMC. What I did is I took, remember guys, last time I took one long at candle close, and then I split the difference between where it was and the next area of support and resistance. So you can split your trade, essentially take one there, and then you measure the difference between there and the next area of support and resistance, and you put a secondary position halfway in between the area of support and resistance and where the candle closes. So you split your trade, and because we a lot of the time see some heavy volatility and jumping around after the news release, it gets you kind of into a dollar cost average position that's better than simply taking it candle close. And then if the market just simply runs, which in the Dow so far that's what's happened, then you don't miss out. But if we get that volatility and then eventually it runs, then you get kind of an average position that's better than simply taking your full position at candle close. So Dow is winning. Looks to be up about 50 pips already. Oil is a little bit against. And how's the DAX looking? And also with these news trading positions, we're not trying to capture 1,000 pips from it. This is essentially, once I start moving to live trading, eventually my goal is to aggressively manage the position, capture a few dozen pips per instrument, even though it might run for hundreds, capture at least a few dozen pips per instrument, and then leave a little bit left on the table to simply run if it runs far. And so the DAX has made a nice move as well, going from about 95, looks like it's run about 70 pips, and now pulled back a little bit more like 40. So within just a 5-minute period, we've seen a potential 70 pip gain on the DAX and 50 pips so far on the Dow as our max positive, and just a few pips underwater on oil. So within 5 minutes of entry, I mean, that's over 100 pips just on two positions. I would call that a huge win. Regardless of what happens later, they're both risk-free positions now, and what we kind of have to start working towards is coming up with a reasonable management technique. Because right now it's just kind of manually being managed, considering taking, just basically half the position, putting on a pretty fast trailer onto it to capture that first burst. But everything's still kind of in the theoretical stages. I think probably a first take profit of 50 pips. So we don't necessarily need a positive reward risk for news trading, and maybe rather than a 2-to-1 reward risk, we do a 1-to-2. So if we have a 100 pip stop, then our first take profit should be 50 pips, and that way we just capture it quickly within a few minutes, and then we just move, put the rest to break even and let it run. And really, since you're splitting the position, technically the reward risk is 1-to-4, but still, this is a very, very high risk trading environment situation. We're not doing this on a regular basis. special situation. Yeah, that's why we don't have a one-size-fits-all approach. That we try to always be cognizant of what's going on and adjust our trading accordingly. And it looks like gold's in a little bit of a stall, which makes sense. It's stuck at a very important area of support and resistance. Let's check back with oil. Oil's a little... Oh, okay, so now oil is about break-even when you factor in the spread. So essentially we've got 2 good wins and 1 at break-even, as far as the trades I took. Good stuff, good stuff. You guys take any positions on any other instruments that are not on my charts? Maybe let me know how you're doing as far as if you took any other positions. The CAC was good, right on. For a sell, I'm taking it. Yes, right on, right on. I think you're right about taking some profits on, say, 50 pips on the Dow and DAX and try to run some. But I would say the stop still could be a 1.1 based on what we have seen so far in these sessions. I would agree. I would agree. We don't necessarily have to have the full protection of support and resistance because obviously if it did come back to run against us for the full 100 pips, then we might be looking at a reversal trade, say by the end of the hour or, a few 15-minute candles later. So I'm going to go ahead and write that down. That really what we're targeting here is going to, in the future, so, if somebody attends for a first time in the future, we will target as a 1.1 1-to-1 ratio as far as our stop and primary take profit. So whatever that might be. And for now, we'll say 50 pips on something like the DAX or the Dow. Got to go, Omar, but that was fun. Well, it's great to have you with us, man, and I wish you the best weekend. I'll catch you next week. Agree 1-to-1 makes sense. You can always re-enter. I would agree. So let's go ahead and say that we'll kind of use this as our rule from now on, that our RR should be 1-to-1 based on our primary profit target. Once primary profit target is hit, stop to break even and let the rest run. And let's say, for the sake of argument, that we trail by the same amount that we used as our stop loss figure. And we'll trail by stop loss figure. And that seems to appeal to the mathematical side of my trading brain. Of course, another approach could also be that you leave your stop, you could leave your stop at the stop loss point, and then the worst you could do is break even. I prefer the old city approach, all on, all off, go to pub. I like that too. And actually that makes sense. So you're getting 1-to-1 as you hit your first take profit, and then you're done. And you got nothing else to worry about. And, like I was saying earlier, we're not trying to shoot for the moon here with these news trades, regardless of whatever the run out might be. Because what we've seen more often than not is that news gives us temporary volatility, a move initially, and then it just kind of reverts to the mean and kind of comes back and settles down. So these aren't long-term trades. So maybe it should just be a singular position. We hit, our 50 pip take profit, and that's 50 pips. Exactly, never going to get it all. And we shouldn't even be trying to get it all. You're absolutely right. You're absolutely right. We just take the money and run. And 50 pips from a news trade, in my opinion, is phenomenal. I mean, that's great. That's great. Even if we get, 25 pips from a news trade, if we can do it consistently, particularly since the money is, like today, the money is made in the first 5 minutes. We're getting, 50 pips in 5 minutes. I think that is more than enough. So we can see that that's precisely what's kind of happened. We've stalled out a little bit, and we're coming back a bit. On the DAX, all the way back. Would you stick on the 15-minute chart or move to the 1 hour? So since both, I would say both. So since we are now coming to an hourly candle, we should kick it up, to the hourly chart and see if we have some kind of new opportunities there. It's going to be too hard for me based on my slow internet connection for me to display that. So I'm going to stick to the 15-minute. But yeah, that is that. And for next news, I'll have both charts up. I apologize, I don't today. So at the hour, since essentially we have two 15-minute candles around the news, and then at the hourly candle, we should see if there are indeed good hourly setups. And that's kind of the news trading gambit is, hit the 15 minutes after the news, and then as we approach the hourly, see if there's a fresh hourly setup. Now, from my experience with our exploratory sessions, our best trades and our consistently good trades have come only from 15-minute candles. The hourly ones aren't or haven't been so far that great, because what happens is sometimes we get a reversal after our initial burst from the 15-minute, or we have that reversion back to where we started. And so what might appear like a good 1 hour signal ends up just kind of going back and going flat. So from my experience, the first two 15-minute candles after news release tend to be the most profitable news trades, but I would implore you to do some research on the 1 hour setups, because I have taken them. The results as far as for me, the 1 hours have been kind of smaller trades or been kind of knocked out. But I think we should continue to examine and see the validity of taking the 1 hour signals after the news. But as far as from a pure profit standpoint, the results from the news trading so far, the best results have come from trading the 15-minute candles. And what's going on right now is pretty typical. We see a volatility kind of burst, and then sometimes we get a pullback. So now we'll just go ahead and examine in the case of the DAX, the 1 hour. Now, I usually try to monitor these for kind of the rest of the day on Friday. As you can see that at least on a Momentum Master on the 1 hour here, looks like that would be a pretty decent setup there. And same for the 1 hour here on the DAX. And the Dow just keeps on running. It looks like in the case of the Dow, the 1 hour signal so far is still pretty decent. Still looking like a win. Gold is starting to make a move, so if you took the 15-minute signal on gold, you'd be in profit now. Let's see how our oil trade is doing. Oil trade is definitely in the win zone now. Nice. So, again, it's kind of shocking to me because I had, prior to doing it with Triple Threat, I had really given up on my news trading ability whatsoever. But on today's FOMC, guys, all the signals have been wins, that's pretty exciting. I think that's an understatement from how I feel about it. That's really exciting as far as I'm concerned. To be able to even take, good profitable trades on news half the time is exciting. But I mean, we're hitting it at a level of about 75% win rate at least for our last few news trades. Basically, last time we traded FOMC, that was, I think, all wins and 1 loss, and this is all wins today. Euro US dollar not holding gains. And to be honest, that's why I kind of focus on the non-Forex stuff, because I remember, and maybe that's what pushed me off news trading in the first place, is that Forex is very, very difficult news trading environment. So we'll just kind of have to monitor the markets for the next few hours and see if we get kind of the hourly view holds for what we saw in the 15-minute entry. And maybe in that case, we find that Forex does better over the next few hours rather than the initial pop. I have a nice little comment here. Once again, the method is working really well, and despite very large initial moves on the 15-minute candle charts, just need to tighten up the rules, and this looks good for live trading in the new year, perhaps. Great minds think alike, my friend. That's precisely my goal, is that in 2016, I can start trading this live. But I like the fact that we've been very disciplined in kind of the testing phase of this approach. And I agree with you. So the fact that we've been able to just kind of throw our normal rules out the window and say, let's just see what happens based off these 15-minute candles, like I said, it's very exciting. There's not a lot that happens in trading anymore that gets me kind of like, wow, this is a lot of fun. This is really exciting opportunity here, new opportunity. Because as time's gone on, I've kind of become less open to new ways to trade, which has kind of served me well after creating this system that I've gotten real specific about how I trade it. But this is very exciting stuff, and the fact that, you know, we've been able to consistently trade what are normally very, very scary things. And our approach doesn't rely on any sort of, you know, got to get your order in before the market slips, because we're not trading right at the drop of news. We're waiting for 15 minutes to transpire, let the market settle down a little bit, then we enter the market, and we're not trying to take the whole move. We're just trying to take, you know, something consistently repeatable. So yeah, I'm glad we've got a little bit more as far as the rules go. We'll start testing that approach going forward. Obviously, with the next FOMC, we'll be doing this again. But today, I have to say, is pretty good results. All three trades I've taken were wins. And DAX is coming down as well. And it looks like the DAX 1 hour setup so far is a win. The Dow is definitely a win. And oil is, oh, the Dow just keeps running. The Dow, the DAX, and oil, all wins. And that looks pretty good on my demo account. Oil, not a tremendous mover, but a win nonetheless. So awesome stuff, guys. Awesome stuff. Very exciting. All right. Are there any questions, comments, or anything else you guys want to cover before we wrap this up? Looking ahead to next week, Dr. Paul, I think, has another tool for us to test out called Tripwire. It's an alert system essentially that is based off of reaction to support and resistance, so that you don't have to sit and monitor your trend lines, horizontal SR, that kind of stuff, that it alerts you when price is reacting to support and resistance, and then you can potentially set up a trade. So should be getting another nice piece of software next week to test out. And again, guys, thank you for showing up for this news session. It's a lot more fun when we have more people, and today was our biggest news trading session yet as far as attendance goes. And I would agree with this comment, all good and really interesting. Again, yes, very fun stuff. Another comment, very cool to see this method. I learned things tonight. Good, good, good. Yes. It's great because we're starting to put in our bag of tricks an approach for each situation in the market. So we have, you know, our standard setup works really, really good for continuation moves. Our PFT approach works really, really good for reversal from support and resistance. And we even have a news trading move in addition to the specific DAX trading methodology or the 5-minute methodology. We're starting to put together a great set of entry and management approaches based on what we're trading and when we're trading it, and I think that makes us really well rounded. Oil's finally trying to go. Oh, get me all excited about this. Let's see here. And it is a moving. It is a moving. Nice. And that just extends the win a little bit further. So very, very good stuff. Obviously on oil, target is 43.75. So not that far away from take profit. Good stuff, guys. Good stuff. So huge thanks to you for showing up. Thank you for also not just being here, but contributing to the body of knowledge. Your comments and your inputs are very important to us developing this system. That's why I've, you know, always said this was the team approach and not, you know, teacher-student. That's not how it is. Everybody has an equal say here, and everybody's comments and analyses are very, very important to what we're trying to do. So I wish you the very best for the rest of your day. I will catch you at the Weekly Outlook hopefully now that we have our kind of our big news week over, we can get into October, really start making some good gains. It's been a positive week this week. Not huge, not huge gains this week, but still profitable trades were there, and we caught them when we could. So excellent webinar again. Thank you, Omar. Sorry not being around much this week, but should be okay next week. That's quite all right. You essentially didn't miss a tremendous amount this week. In fact, the NFP trading that we've done today has been by far the most exciting day. So thanks a lot, guys. I hope you have a great weekend. I will see you next week. See you in a week off golfing abroad again next week. Good for you. I need to get out to the course. You know what? Maybe I'll do that today. We've had such nice weather here in Oregon. I think I'll head to the golf course as well. And since I'm up early already, I'll be able to get out there before everybody. So take care, guys. See you soon. Have a great weekend.